TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 19, Nasdaq's up 4, S&Ps are down 3. Gold contract is trading up $1.30 at 1,115. We have silver down 2 pennies at $15.24. Platinum is up 6 at $9.69. We have light sweet crude down 54 cents at $47.37 a barrel. Bonds, the 10-year is up 1 tick. The 30 is up 12 ticks. 127.05 for the 10-year, 155 for the 30. King dollar is up by 672 ticks, trading at 97.90. The euro is down 89 at 108, and the yen is trading at 121.42. Now we go over to the S&Ps. We take a look at the SPY. What you're going to see is this, folks. We've done 100% move of the move, meaning if we go back to the 18th of August, you're trading at 210.68. We've hit 211.50. Right now, you're at 210.58. Now, if you're into council charting, candlestick charting, patterns in general, there's a pattern out there. It's called 3 black crows. Now, this is, folks, one of the most bearish patterns in the marketplace. And it's a pattern that what it sets up is this. You come down very quickly. You come down 3 separate days in a row, almost the same amount of price. That's what we done the 20th, the 21st, and the 22nd, and 24th, rather, of August. Those patterns love to get tested. Now, the amazing part about it, of course, is that when these set up, the downdraft to come down 3 days in a row very quickly is hard to do. To come back and test them is almost impossible. We'll see if that, in fact, is this. The longer-term aspect of a 3 black crow is that that's the beginning of a huge downdraft, not a small downdraft. Now, we've just tested it. We'll see, in fact, if that's what we have. If it's a failure, the way this works as a failure is like this, is that all the indices would have to go to all-time highs, and we're right next to them. So we're going to know soon enough, is this a test of the 3 black crows? And if it is, guess what? You're going to be back down to the lows of August, but you're going to go lower than the lows of August. Now, if you want to take a look at a few of these setups, all you have to do is go back to 2007, go back to 2000. They're really hard to set up. So we'll see where that whole thing does shake out. What we do have, let's go. Okay, so all the indices are set up. Well, when I say all the indices, the Dow, the Nasdaq, the S&Ps are set up like that. Now, let's go over to the gold contract. What do we do with gold? Gold right now is down to 30 cents. We are at 73,000 contracts. Gold is going after where the sign of strength was out here, which is 1103.80. We'll see whether it can get into that area out here today. We go back to the dollar. The dollar is moving with strength out here today. The dollar is in a confirmed ABC structure on the way up. We have 14,000 contracts out here today. Bottom line yesterday was light volume. You're going into 47,000 contracts. The A to B equals C to D gets you into the 100 level. Bonds, we go over to the bond market. What we have with bonds out here is this. Bonds are flat out here today. Bonds haven't made it to the lowest swing point yet. It looks to me like, number one, yeah, the lowest swing point is going to get tested. The real key is it going to break that test? So what you can expect out here today is continued high volatility in the marketplace. The bulls and bears are going to be fighting like crazy. What is unusual is that our indices are even red because Asia was so much higher. Europe was higher. Volkswagen has taken the DAX to the cleaners. Volkswagen's down 10%. That's going to continue to put more pressure on the DAX. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, give them a call at 855-750-4051 or visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking right back here tomorrow morning, 10 o'clock.
If If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.